All right, welcome to this explainer on Mark Douglas's legendary work on trading psychology. Today, we're basically going to perform some necessary mental surgery on how you view the financial markets. Look, we aren't pulling up charts today, and we aren't dissecting stock fundamentals. Instead, we're turning the lens inward. We are going to completely reconstruct your mental framework from the ground up, using Douglas's absolutely groundbreaking insights. So let's just dive right into this crazy paradox. What if the very habits that make you a stellar citizen, an A-plus student, or just a super reliable employee, things like avoiding mistakes, craving certainty, trusting cause and effect, what if those exact traits are precisely what will ruin you financially as a trader? It sounds totally backwards, right? But stick with me. As we unpack this, you're going to see exactly why the skills you use to build a safe, predictable life are the exact same ones that can literally empty your trading account in a matter of days. To really get this, we kind of have to look at Mark Douglas himself. Back in the late 70s, this guy was not some Wall Street prodigy. He was just an ordinary, highly successful guy working in commercial casualty insurance who decided he wanted to trade. He worked hard, he studied constantly, and yet he lost practically everything he owned. Multiple times. He'd freeze up on good setups, stay way too long in terrible ones, and cut his big winners incredibly short. Eventually, it just hit him. The problem wasn't his charting software or his strategy. As he realized, the core issue was his own mind. It was a massive flaw in his own mental programming. Which brings us to our first core concept, social conditioning, and the roots of our flawed mental software. Douglas coined this brilliant term to explain why 90% of beginners wipe out. He called it the mental gap. Basically, this is the profound psychological disconnect between our lifelong societal conditioning and the cold, hard reality of trading. Think about it. From the second we're born, our parents, our teachers, our bosses, they all program us to thrive in a highly structured environment. But the stock market, it's the exact opposite of that. The contrast here is just massive. Out there, in everyday society, we live with strict rules, a linear cause and effect, and a deep biological drive to avoid pain. You study hard, you ace the test. You touch a hot stove, you get burned, and you never do it again. But the market, it has absolutely zero external rules. It operates on purely probabilistic outcomes, and financial pain is completely inevitable. In the market, you can do literally everything perfectly, run a flawless analysis and still lose your shirt. Or you could make a completely impulsive, terrible decision and win big. Let's move into our next section, the mental gap and the modern illusion. So this psychological gap has always existed, but today, modern technology exploits it like crazy. I mean, think about it. You can open a Robinhood or crypto account in what, 3 minutes? The interface looks exactly like a mobile video game. It's clean, it's colorful, there's confetti. But this creates a seriously dangerous illusion because it masks the underlying chaos of the market. It completely tricks our socially conditioned brains into bringing our everyday expectations into a probabilistic arena. Amateurs expect a linear reward for the hard work of staring at a screen, and it leads them straight into a psychological meat grinder when random, chaotic market movements totally short-circuit those expectations. And when that illusion inevitably shatters and the losses start piling up, well, we enter the ego's desperate trap, the illusion of blame. To survive this arena, Douglas says you have to adopt something called absolute responsibility. This means taking 100% accountability for the outcome of every single trade. No excuses. If you lose, it wasn't the evil hedge funds, it wasn't market manipulation, and it wasn't fake news. You chose to click buy and you define the risk. Whenever you blame external factors, you are giving away your power. You're trapping yourself as a perpetual victim who literally can't learn from their own lack of discipline. Now, why are we so obsessed with finding a scapegoat? It boils down to the intense emotional burden of being wrong. Remember, society beats it into our heads that being wrong is bad. It means punishment, it means failure. So when a trade goes south, your brain genuinely interprets it as a massive emotional threat. Your ego scrambles, rationalizing why this should hold on to a losing trade just to avoid the pain of admitting a mistake. We see this constantly in modern meme culture. Diamond hands? A lot of the time, holding on to a tanking asset with diamond hands isn't bravery. It's just a psychological defense mechanism. It's a way to disguise a complete inability to accept a loss and just admit you were wrong. Okay, so how do the professionals actually deal with this? Let's pivot to our fourth section, thinking like a casino. This is the absolute core solution. Professional traders think purely in probabilities. Just consider this number, 60%. In the trading world, a truly excellent, highly profitable system might only have a 60% win rate. Let that sink in for a second. It means that even with a world-class system, you are absolutely guaranteed to lose 4 out of every 10 trades you take. Period. Losing isn't a failure. It's just a normal operational expense of running your trading business. Which brings us to a really fascinating question. Why doesn't the casino ever panic? If a tourist walks in and wins a massive lucky hand of blackjack, the casino owner doesn't start sweating. They don't change the rules of the game, and they definitely don't get emotional. Why? Because they aren't trying to predict individual hands. They know they have a slight statistical edge playing out over thousands of hands. They think in probabilities, not certainties. And honestly, that leads to what I think is the most liberating truth in trading. You do not need to know what happens next to make money. Once it clicks that your trading edge is simply a higher probability of one thing happening over another, the fear of being wrong just evaporates. If the outcome of your next specific trade is essentially random, there's nothing to fear. You aren't emotionally invested in being right. You're just calmly, mechanically executing your system, just like the house at a casino. All right, let's get actionable. Section 5, Building Discipline and the Blueprint for Mental Engineering. Douglas makes it very clear. Discipline is not some magical personality trait you're born with. It is a mental muscle you have to build. He lays out 3 rigorous steps to do this. First, you have to define rigid, binary, written rules. Because if it's not written down, you don't have a system. You just have a license to be impulsive. Second, practice perfect execution on a block of 20 trades, ideally in a demo account. The goal here is not making fake money. The goal is flawless, boring obedience to your rules to prove you actually have self-control. And third, consciously rewrite your beliefs daily. You have to actively repeat and drill these probabilistic beliefs into your head until they finally overwrite your old societal programming. So how does this hold up today? Let's look at Section 6, Surviving Modern Markets, and how to use this as a shield for the digital era. Douglas wrote this stuff in the 90s, but it's literally the perfect shield against today's hyper-fast markets. Against the FOMO and gamification of modern apps, you deploy absolute rigid discipline. When you're facing the violent, crazy volatility of crypto, you rely on that probabilistic mindset, knowing any single trade's outcome is just random anyway. When everyone is hyping up AI and trading algorithms, you remind yourself that a system is only as good as the unwavering human executing it. And against internet echo chambers that just breed a toxic culture of blame, you stand entirely on your own with absolute responsibility. And hey, these concepts aren't just for people day trading futures. Take a look at the long-term index investors in the FIRE movement, Financial Independence Retire Early. They use these exact same psychological principles, just stretched out over decades. By perfectly automating their monthly investments into diversified ETFs, they completely bypass the flawed emotional human mind. They remove the pain of being wrong on an individual stock pick. And when the market crashes 30%, their probabilistic mindset, trusting the macro 30-year upward trend of the global economy, keeps them from panic selling. It's basically the ultimate automation of discipline. Ultimately, here's what you need to remember. The market is entirely neutral. It doesn't know you, and it cannot hurt you. The battle you're fighting was never actually between you and the charts or you and the algorithms. It has always been fought entirely in the 6 inches between your ears. So before you fund your next account, before you click buy on your next trade, I want you to ask yourself one final unavoidable question. Are you truly ready to master yourself?